Well, let's connect with the management then of TCIExpress to talk a little bit about the margin impact on account of the higher fuel prices, what their outlook is for FY19 as well as the expansion plans. Chander Agarwal is the Managing Director, TCIExpress, now joining in on the show. Good to have you with us. Chander, to begin with, we have, of course, been seeing those diesel prices going through the roof. That's a key operating cost for you. So to what extent have you been able to pass on this increased burden to your clients? Are we seeing any increase in the credit cycle?
So about 80% of our clients have actually accepted the diesel fuel increase, and the remaining 20% have yet to we pass it on, but it takes a little bit of longer time. And this is kind of like it's a given thing, because the larger the clients, the lesser they would take on the diesel fuel surcharge. I think the margins will not be affected to that greater of an extent, because we are an asset-light model. We don't really own any of our trucks. So saying that, I think the entire diesel fuel price increase, if we are able to pass on about 90% of it, our numbers still look at the profitability still remains, as per our expectation and as per our calculation. Now, in terms of growth, we are expecting about 25 to 27% year on year. That is still intact. There is no change in that.
Okay, so the 20% of clients to whom the fuel increase was passed on, which is slower, what's the differential and how much do they contribute to revenues, as they seem to be in a better negotiating position right now?
I think 20% of these type of customers, they're a mix of our SMEs and our top clients. So they would constitute only about maybe 30% of our business. So in hindsight, we're actually in a better position than most companies. Unorganized companies are not able to pass on any of this, and they have to bear the brunt. So going forward, I think we have taken internally a very strong process of actually increasing our prices and also looking at the diesel fuel surcharge that we have implemented.
Now, have the higher fuel prices weighed on consumer sentiment as a whole? I know you started off by saying that the customers have accepted that increase, but there seems to be underlying traction in volumes. But how much better could it have been ahead of the festive season, say, if fuel prices were not pinching as much? Because there has been a considerable shift underway from air cargo to surface transport.
So I think overall the economy is growing phenomenally well. I mean, we're the fastest growing economy in the world. And even the latest IIP numbers that have come out have shown that we are quite progressive. So this is a very short-term shock, which is, I think, which will go away, because, and this fuel increase is not because of any problems in our economy. It's because of the global, the dollar becoming stronger and the crude supply becoming lesser. I mean, not just us, the whole world is getting impacted. So we should not undermine any of the fiscal policies that are in place, because they're going, the demand is increasing, the manufacturing is increasing. Everything is we're the barometer of the economy. And if we are growing at 25%, it clearly shows that the economy is also doing quite well. As far as the price increase, this is something, it's a very dynamic situation for the government, and I'm for the effect that this price increase, when it happens globally, it's passed on to the citizens of any country, because you don't want to take on a fiscal you don't want a fiscal deficit of a country to increase just on taking more debt. So I think it's a very progressive move. And the whole country should kind of understand that this is something which not just India has to deal with, but the whole world is dealing with. As far as the festive season goes, we are seeing that the demand is actually quite robust in transportation. There isn't any sort of the consumption is very strong. Hence, the transportation demand is very strong. So there is not any sort of like stalemate in any of the economic numbers. In fact, if you look at the automobile sales, typically earlier when the fuel prices used to increase, this used to dip. Even that doesn't happen anymore. So I think we're on the right track, and we will see that by the end of the fiscal year there'll be a very good set of GDP numbers and macroeconomic numbers as well.
De-risking strategy then to protect from fuel fluctuations in the future, especially when you have big clients who have a stronger bargaining muscle, even newer clients who you know, have very competitive pricing.
So the customers, they also understand that, you know, like post GST, the cost of actually operating has also gone up. I'm sorry, not the cost of operations, but the cost of compliance has gone up. So for a company like TCIExpress, compliance has always been the fundamental basis of our being. You know, we have to ensure that corporate governance is at, you know, on our, the threshold of our success. And saying that, I don't see the customers shying away from, like, you know, increasing their prices with us, because it's a valid reason. The unorganized companies which have not been able to provide this GST service or the e-way bill service or any of this, they are not, and they demand a higher price, they will never get it. Customers are understanding that. Hence, I will see that the benefit being passed on to us in a very positive manner.
Okay, you've been stressing on that point about how customers have accepted that hike and how they are fairly understanding. So no worries when it comes to the overall competitive edge. Many thanks for joining in then and giving us a sense of what this fuel price rise means for you, your overall capex plans as well. Tell you what, let's slip into a quick breather, a break right here on the show. After a break, when we come back, we'll be focusing in on the analyst meet takeaways for HUL, as well as get your expectations as to what to anticipate from the SEBI board meet. That and lots more.